I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi, and welcome back to the Conscious Day Trader. As you can see, we had a bit of a problem with my camera today, so we're going to use my iPhone. Still quite good quality, and you also get to see Phoenix going crazy in the background. He's seen a cat, so he's desperate to get out, but I'm definitely not letting him go out. He's never gonna come back. That being said, welcome to the channel. Today we're gonna break another pound USD trade, so GU, and I was short. A lot of people were long today, and it just shows that you can make. It was quite an easy trade today. ICT 2022 mentorship. Core content, so we're looking at fair value gaps, we're looking at liquidity draws, we're also looking at buy side liquidity that was tackled early into the London kill zone. We're going to go through every single bit of that information. We're going to look at the dollar index as well and compare that, how we put our previous daily bias and all this good stuff that you're normally familiar from this channel here. But before we do that, make sure you go onto Instagram and follow my Instagram account, theconscious.daytrader. We are slowly growing there as well. I'll show you everything about what we're doing here in Bali. It doesn't look very great because it's dark, but trust me, it's very beautiful with a lovely background. Sunsets are to die for here. This week is called Nyepi, so it's a local ceremonies that's happening all week. Actually, Wednesday is a silent day. Oh, hello. Decided to come in the picture. So yes, Nyepi is a local ceremony week. It's a bit, it's very important to the locals, and we are going to be staying at home. We're not going to use a lot of technology and lights. It comes with the culture of living in Bali and respecting in their culture, and a lot of certain circumstances joining in and becoming one with the community, and it's beautiful to see the good side of living with the locals and absorbing the culture and the differences that we have from the Western world. That being said, let's jump now onto our trade. We're going to go straight onto our MT5. And we had a great day. We had $547. Super easy trade today. It was quite clear. And as you can see, just remember these numbers. I've put them on the charts, but my best entry in terms of straight to target was the 122013. Doubled that. So that was 20 pips on each. And then we got another 20 pips from my worst position, which was 12194, but we repositioned into, it was 121900 and repositioned into 122124, which gave us 17 pips. And we did really, really well. So what we're going to do is jump straight onto TradingView. And we're going to start by looking at the dollar index. The dollar index, from a clean chart, this is the information I put in. So this is the sort of, what I want to do when I'm looking at the dollar index is I want to see, are things aligning with the pound dollar? Am I seeing the right opposite that we should be seeing on the pound dollar? Is it targeting something that's going to help me go towards my profits? And as you can see, this is the current price. That fair value gap is looking like it's potentially going to achieve it. However, you've got buy side, sell side liquidity below this area here, which has just taken out. It's now 8:30 here, so we're looking at the New York session at the moment. So let's put that in. Sell side liquidity, when it takes that sell side liquidity, it can do things. Now, look at this setup. We're in extreme discounted area because we're trading below the previous daily low, and we're hitting that sell side liquidity. Can it push all the way down to the daily fair value gap? Potentially. If it doesn't, where's the next target? Eventually is buy side liquidity above these highs here. 1, 2, 3. If it breaks that and goes higher all the way up here, that's if the dollar is going to be strong. Now, if the dollar is going to be weak and it's going to be going down, what does that mean for the pound dollar? It means that it's going to be long, it means that it's going to be strong. So if you're looking for long setups, this information here on the dollar index is looking great. Now, if you're trading from like I trade, obviously we didn't have this information here. We were trading quite above the previous daily low at the time that I was trading, and I thought that the pound is going to be short. For the pound to be short means that the dollar index needs to be long. So let's go on the 4 hour for a second. So this is what we saw. If we actually, let's go on the 15 minute, because then we can see the London session and the London kill zone. So this is the information we had. We were here, 7 a.m., came down, discounted area, and pushed up and took out buy side liquidity above these equal highs here. So this is what we traded with a strong dollar, which meant that the pound is going to be weak. Traded that once, came back down, increased up to my reposition, and then pushed back for another 10 pips. That is how my trade looked in terms of just looking at the dollar index. That's all the information we saw. We also had a gap that got filled pretty quickly. So if I was, that 10 o'clock, this is London time. So this, I could have traded this in the Asian, didn't. So I traded the London Open as I normally do, because that's where I had my first success. We're running all green days, 100% win rate from January. And we're going to look into the results as well. I haven't imported this day, but we can see if I jump onto my funded account, we can see that we're running on $6,000 in this month. So super happy with that. We're going to try and aim that 5-figure 10K. It might be a bit difficult because of the situation, because we're going to be, because of the ceremonies that's happening this week. So electricity might not be available, but we'll see. So as you can see, we've done 65% of the next milestone, which is going to be a huge one, 200,000. I can't wait for that to be reached. It's a huge milestone. We're currently sitting at 188,600 of a funded account. Remember, this started with 100,000 funded account. Obviously, the milestones, they give you a bit of a bigger account, so it's not all profit. They actually give you every 5%. They increase your, I think it went to from 100 to 50, 150, 150 to 175, which we are now. And next one is going to be 200. So brilliant. So we're looking on a nice graph upwards. Let's go back to our charts. And I'm going to try and keep this nice and sweet and quick. I know you like good information. That's quality and it's not too long. People that follow ICT know exactly what I'm talking about when there's 3 hours of content to get the information out of him. But let's go back and see what we saw on the replay. We're going to take it out and we're going to go at 7 o'clock. I started looking at the charts at 2:30 my time, which was 7:30 UK time. So this is what we saw. And we also went on to the daily quickly, and we put our previous daily high from Friday and the previous daily low, our equilibrium, like we always do. And then I went on to the 1 hour to see where my buy side and sell side liquidity was. And we determined of the buy side liquidity above the previous daily high with these highs here, also this high here, and this that broke, gapped up, came down, and now pushed down. We're going to talk about why I was short on the pound dollar. Then this fair value gap here on the daily, if we jump onto the daily to show you that, we can see that that area now is still to be filled. It's come to that part here. If you want, you can drag that down here. This is the fair value gap that hasn't been filled, which potentially the price can come down. As you can see, it's trading now at an extreme premium price. So if you were long on this, well done. You would be trading quite successfully after the London kill zone and definitely into the New York session. This is looking like it's going to our buy side liquidity that we've talked about earlier. Will it go there? Just have to wait and see. But this is the next target, taking these highs here. Why? Because stops out there, and also we know that algorithms like to go and draw liquidity above equal highs, and these are pretty much equal highs. Also, next target is a big one, but it's quite far away. It's a big fair value gap. It's a buy side liquidity above this area here with equal highs. We know this, we've been following this. These are the double top that we've been discussing. And as I've been saying, I like being short in this move because we've got a double top. It retested, took out liquidity from the sell side here, from that area here, pushed back up, came, filled fair value gaps, touched the fair value gap, pushed up all the way up, taking liquidity from here, potentially here. But as I said, my bias was short for the next candle, and it worked out really well. That's why you need to understand when you've got a bias. It doesn't mean that the bias is going to be right for the whole day. It just needs to be right for what you're trading. In and out, get paid, and good to go. That's what's going to give you consistency. And don't be greedy. If I was greedy, going for double the profits that I got, then I would be wrong, because the next few hours would be trading against me. So let's go and see my setup. I'm going to go onto the 15-minute. And I've put my worst entry, best entry, and my reposition. So we're going to break down this trade now. We opened London and we saw the price going up. What I wanted to see from this is that we trade above the previously daily high. So what I wanted to see was that the price breaks up above the previous daily high. It takes out the buy side liquidity, and then we trade it down towards equilibrium. Why? Because we're at a premium, extreme premium from the previous daily. And if you remember, like we discussed on the daily, our bias has been short on the pound dollar after having the double top on the daily, and now it looks like it's coming to retest that area. So it'll be interesting to see how the price moves in the coming weeks and how news is playing an effect in that. But as you know, we don't trade the news, we trade what we see. And as you can see here, this is from 7 a.m. It pushed all the way up, created the London high at this stage, and came down. Where did it stop? It filled in this fair value gap pretty to the pip. So if you were trading long on that area, well done. That would have been a nice entry on the 1 minute fair value gap. And then let's continue. That would have given you that trade by itself from 7.45 would have given you 18 to 20 pips and more, I think. Let's see. It would have given you up to my entry pretty much. So that would have been 20 odd pips. Right. So, and I entered above my previous daily high. Now, I really wanted to hold this and get out in this one trade, and that's where the lot size does come into play with my trades, because I'm looking for I'm trying to aim for 400 to ideally 500 and above in terms of my daily profits. And this basically hit, as you know, with ICT, what we try to do is to tackle sell side liquidity and buy side liquidity, or equilibrium, or previous day. All these are targets for our profits as well, not only entries. So we're going to see why I entered there, but also let's discuss why I exited here. From here all the way down to 22 pips, I think it was, literally below this area here. Why? Because this is our sell side liquidity around this area here. Now, I could have held that, and I believe I would have been, what I was aiming for, no, that's not the position. What I was aiming for was that 30 pip there. That 30 pip would have given me $600. So even a bit less. Like, let's say if I had aimed for this swing low here, but sell side liquidity, this one here, which it did take out, I would have made a very good profit of my $500 for sure. And that would have been the day done. But it was really early in the trading session, literally the open. I got, as soon as it broke the previous daily high, I wanted to trade this short. We discussed why, because it's very close to taking the buy side liquidity on the top above this actual gap that got filled. Yes, would I want it to go a little bit higher? Yes, I would. And as you can see, I had to reposition later to complete my trade. But I didn't want to miss this trade for 0.4 pips in the area that I would be trading it down. Now, another question is, why did you enter here as an ICT trader? Because in ICT book, your better trade, if you want to short this, you would want to see a break of structure like here below this, and this comes back and fill this gap here. So this would have been my entry. And if you're an ICT trader for the 2022, you've seen these and you would be like, yeah, that makes sense. We had a break of structure coming down where our premium area, yes, it didn't break the previous daily high, but I want to trade it down to this swing low here. And that makes sense to me. If you did that trade, you eventually, yes, it would have to sit in a bit of heat of probably 9 to 10 pips, but you would still get that delivery of the trade. And if you had held it towards this one, then you would have get the 20-25 pips if you're looking for that. Now, I took my trade out and it was the right decision at the time. Why? Because if we play the tape down, we'll see it failed to reach this sell side liquidity here. Now, if I had held it, obviously the whole move, and I was at 30 pips, $600, I would have killed the trade anyway. But I was safe because I didn't hold it for another 10 pips. I took it out and killed that trade. And this is crucial with repositioning, because we're going to discuss repositioning now. The method that I sort of choose to trade in and out of my positions. That's why you see some trades that I have very small profits, like $10. That's not a profit. I'm just killing that trade to break even, and I'm trying to get a better price. Now, when I saw this coming back up, if you're an ICT trader, you know what I did. And if you're following me, you also know what I did, because you're getting used to what how I'm trading. This area here was the top of this fair value gap here on this low. Now, why should I have waited for this trade and not entered so early? Yes, something played in my mind. I was $420 up, and I only needed 10 pips. And I believed that we're going to have a reaction around this fair value gap and this fair value gap, push down for 10 pips, and I would have had my $500, and I would have been good. It did try to do that. It did it a little bit higher. So as you can see, my position here is not very good. So what I did, I entered again at the previous daily high. When it came down, I killed this position. Came back all the way up and entered at this reposition here, which was my best. Why? Because that was the original plan. And you can say, yes, you can wait and take this trade instead of this trade. But because we had already that push and it came back and filled this fair value gap, at this moment here, I thought it's going to fail to break this swing high here. So my position wasn't wrong. And that's why I like doing repositioning. Something that I've developed that works for me is I can manage my trade by killing and re-entering. And this was my best position. I was very comfortable here. And what I needed to do, I had 2-3 positions on this. I needed this price to come just 10 pips down and I would have killed my other bad position. So now I'm only sitting with that really good position at the top, and eventually that came back down and paid me, right? So from this position, I only needed 10 pips. I think I made 17. So I killed the trade there. When I saw that indications of that order block, if you want there, and it was close enough to that swing, equal swing low. What rests below the equal swing lows is the sell side liquidity, this one like this. So it got taken out. I was done for the day. And I also had traded my copier, which I'm not using it as a copier yet because I wanted to build it a little bit. So I'm getting a higher price. I got where the reposition was my first position for the copier. So that way I know that I'm risking a lot less because we've already had this move and this wave up. So we're getting at a super, super, super premium price. And that was the trade. We had really good profits. So let's go back on to import. I want to show you quickly. I know I get questions on this. So if you're wondering what this box is, you're going to go on the indicator. I've got it on my favorites, but if you type in FX market sessions and populate that, you're going to get this. And in here, you can add what GMT you want. Obviously, I've set it up on London. How many historical sessions you want backwards. The colors, 7 to 10, which is the London kill zone. And also, I noticed that it's not showing the pips. So there we go. That's going to populate here. And it's going to tell you how many pips the London session did. It should anyway. It's taken a bit of time. Let's see. Pips and price and day. There we go. 47.8 pips in this move. So it's not unusual. This London kill zone can do up to, on these lower time frames, can go up to 150. So, you know, we're still managing that trade as well as we can. But this is a good example of how you can make money on the downside. And remember, we were biased short from the daily. So even though there were setups, I did see these setups and I was like, oh, this looks good for the long. My bias was short and I stuck to it and it paid me well. One move there and one move there. And that's why repositioning works for me, because I can manage a bad entry from here and get a better entry up here and then let it run down. And if we see what happened, a lot of people were long today, and I got a few messages like, wow, it's impressive that you made money on the short side. I don't think that's impressive. I think what it is just a plan. You follow a plan, you're going to make money going up and down. People see this and you're like, oh my God, I needed to be long. Look at this. From here, we've climbed all the way up 60 pips. Why the hell would you be shorting? Because we've had this move here, 30 pips, and this move here, 30 pips, 60 pips. If your analysis is right, you've got 60 pips. Yeah, you can trade from here to here and here to here, but also from here all the way to here. And if you want to do the same thing that I did, yes, you would have had more pips. You've got 40, and then how much is that? 40. So you would have had 80, 20 pips. A bit of leave room if you were on the long side after 820. Pretty much equal. The market has been so efficient in providing opportunity on the short side and the long side. It just means that you need to be super organized with your trade, know what you're looking at. These boxes, the pink boxes, knowing that this is where the price is going to be going. And all this is something that you can learn on ICT. It's a free course online, 42 or odd lessons that he goes through everything about fair value gaps, how I created these equilibriums. He doesn't talk about repositioning because that is my sort of management of how I manage the trade. He would talk about tight stops, and that would have worked here, and that would have worked here if you were able to time this. I am not that good of a sniper, so I need a little bit of a room to play. And this is for a perfect example. Now, the reason why this wouldn't be the ideal trade is because this didn't break down here. If that's broken and retraced, that would have continued down from this position. But what we had a lot of buy side liquidity above here, and the market wanted to go and take that out before it retraces, and potentially now it's going and tracing higher. If we take the replay out, look where it's going. It's tackling the next area that we discussed, and that buy side liquidity. It's not hard. What you need to do is go on a higher time frame and look where that liquidity lies. That liquidity lied above these previous highs. The next liquidity lies above this previous highs. Where's the next one? Up here. And we've labeled on the daily this area here with the previous daily highs. That gives you a roadmap. And you can know, is this a roadmap that can happen in one session? 150 pips, yes. Then you know, and you can manage your risk. Can this happen from down here? 300 pips, no. So that's too far. So if the market is moving towards one liquidity sweep, you need to be quite realistic and say, is this going to happen now? If it is going to happen here, does my plan work with the conditions of the market? And that's why I say every strategy works and every strategy doesn't work. Is because every day is different. Look at this. 83 pips in London kill zone, 55, 42. And you can see a bit of average on 50-50, 50. So and then someone will say like, oh, I'm going to trade this because it averages around 50 pips. Go a few sessions back and boom, it's gone down to 27. Boom, it's gone up to 3. So every condition changes. What doesn't change is how the market reacts and how algorithms work in terms of taking out liquidity and distributing price efficiently. And that's what, if you don't take anything from ICT's learnings and you go back to what you're trading and how you're trading, that is the most crucial thing to know, that price is king. Price and time. That's why we look at London kill zone if you want to trade the New York kill zone as well. The reason is because that's when the algorithms come to play. That's when everything is tuning up for the day and it's looking, where is the easy pickings? Where can I get the most money? And that's how it works. So that was the breakdown of pound dollar. Let's go back onto the MT5 and I'm just going to show you, for the people that haven't seen it, how I import all my trade sync. I haven't done this yet, so we're going to do that together. 547, this is on my 188,729. We're doing really well. Let's see how we're doing for the month. We're going to go custom period just to make sure. I always do that. And I just want to upload today, so I'm going to keep that on there. I'm going to go on to orders, and then I'm going to have 16 orders. Obviously, we bought it and sold it, so that's 8 positions. What we're going to do then is change that, and we're going to go on to report and export an HTML. I normally replace my previous ones. Let's go with that one. So we replace that, and then what we're going to do is jump onto our TradeSync. Okay, here we are on TradeSync. Obviously, I've taken out the previous journal, so it's only showing this account which I received a month ago. Hopefully, we might get a new account very soon. We've still got 2 weeks to go, and we're averaging, we're at 5,226. Let's add today's trade. So we're going to go import, and from import, we're going to go and browse and find our document, upload the trades, import trades, and that's how easy it is. I get everything that I need from this journal. It's super easy, super efficient, and that's what I like about it. Then we can go on calendar, and boom, just like magic. 8 trades, 16 orders, selling, and we're buying with our repositions. Starting great for the week. So we're on target in terms of, as of now, to hit that milestone that we're looking for. We're not going to chase it. I'm super happy with this monthly budget as we are now. So I technically don't need to go crazy, just because I'm also building the copier. This says 547, but it's actually 600 because I also traded $100 on my personal account. And that's how we're going to build a little bit of a second account, which what I'm thinking, I just reflecting on that, what I think I'm going to do is open another instant fund with the profits that I'm going to be getting. And then that instant fund, because it's from the same broker, it will be easier to copy trades because the spreads will be the same and the price will be the same. So I think we're going to do it that way, because at the moment I've got a copier on the Black Bull, which is a different broker with different prices. So there's no, I was looking, there was a bit of $100 difference from what I was trading. Also the size of the accounts are different, and that's something we're going to talk about in the trade, the social trading tool, which I'm using as a copier. If you want to use something like this, go to the description. There's a bit of a link there. You can get a discount, 40%. You get a trial, and if you like it, whatever, go and check it out. And that was it. Sorry about the camera setup. I am going to reset that. I'm actually charging the battery. And technology, like when nothing is working when you need it to work. That's a classic thing. If you're from Bali, I am going to be turning up tomorrow. Hello you. Tomorrow is a religious day, which starts with the Ogo. I think I said that right. It's the bad spirits of the island. They're going to be paraded down to the beach, and it's basically seeing or cleansing from all the bad spirits and all the bad doing of the island for a fresh start. And it's going to be beautiful. I'm looking forward to watching the parade. I have been to Bali before, but I've never seen this parade. There's going to be hundreds and hundreds of thousands of people. So I'm looking forward to that. I'll try and share that on Instagram. If you are from Bali and you're in the area of Canggu, you can always drop me a text. I'm always reachable. And yeah, that's it. Have a good one. And I'll see you tomorrow for another trade on the pound dollar as usual. ICT 2022 mentorship, that's what we're using. Also a bit of repositioning, which is something that I'm trialing. I know a lot of you are trying it yourself from what I'm saying. There's no, if you've heard me before and if you've followed me for a while, there's no strict rule on it, because strict rules don't work. Yes, you need to follow in terms of a platform, if you want, or a structure around how you go about and do things, but you need to be flexible every single day to the conditions that you're looking at. If the conditions are changing, you need to be quick to realize that those conditions have changed, and you need to adjust your repositionings, you need to adjust your entries, and so on. That takes time, that takes experience, patience, and it's mentally one of the most difficult things to do is to be patient and take on board all the new information that's coming from the market and not treating it like the same every single day. I hope this has been helpful and you've enjoyed it. I'll catch you tomorrow. Have a good one.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.